Everybody, it's Wilson from Own Real Estate giving you a market update. It is October 24th, and so far we have a little more than 2/3 data for October. The first thing we're going to be looking at is listed sales price and days on market for properties here in San Mateo County. So far, days on market is hovering right around 28 days for October. Last month it was 31 days. So let's just round it to about a month average that inventory stays on market. Listed sales price, as we already know, peaked in March. It was at about 113% average. And right now it's right above 100%, and it's been sitting above 100% for the last 3 months or so. Next, we're going to see inventory in San Mateo. Inventory has mostly not changed ever since June. Consistently, there's about 900 plus or minus homes, single family, townhomes, condos for sale at any given month for the last 5 months. The only thing that has changed is the number of sales. There's a small trend downwards. So far, with 24 out of 31 days in October, there's 280 homes that sold. The prior month, 467. The month before that, 476. We're probably going to end October with less sales in the last 2 months, which is a trend downwards. Next, we're going to see prices for single family homes in San Mateo County. So far, we're seeing a slight uptick in prices for the last 2 months, very, very subtle, from the lowest in August, 2.339 million to 2.34 million in September and 2.376 in October month to date. The peak values was in May at 2.702 million. And that's for single family. This is for condos and townhomes. The highest prices for condos and townhomes was in April, 1.139 million. It dipped all the way to 1.023 for the county. And then right now it's sitting at $1.045 million in October. One of the key things we are following as a real estate team is what we call SAAR, which is seasonally adjusted annual rate of sales. And so far, with September's data, we're trending for 4.71 million sales year over year. Last year, at this very moment, at the same moment, it was at 6.18. So we are seeing a 23.8% decrease in total sales so far year over year. Lastly, let's take a look at anticipated Fed funds rate increases. In November, we're expecting 75 basis point hike. In December, 50 basis points. And in February, a 25 basis point hike. So we're anticipating that rates are going to continue increasing, obviously over the next 3 meetings that they have. And this is saying that the expectation that the market is pricing in is rates will likely not go down until December 2023 and continue at a very gradual pace in 2024. And actually, the AtlantaFed.org has a chart, which is the market probability tracker, which is showing us that rates will gradually go down leading into 2025, but it's probably going to be, at least they're anticipating, a 1 basis point decrease over the next couple of years. How accurate is this? We don't really know, but this is their estimation that they're putting out to the public. The last is Fed economic data, and this is a historic Fed funds rate. And you can see that there's average peak to trough and trough to peak rates and how long each period is when the Federal Reserve increases their rates. But this is just a rule of thumb. The data is obviously backward facing. We're curious to see what's going to happen moving forward. Our anticipation is that rates are going to be elevated, obviously, into the next year and likely 2024. We're probably not going to see the same rates we saw early this year for obviously the purchase rates, the refi rates that consumers get for a long period, if not maybe ever again. What are you anticipating? I'm curious to see what data you're looking at. If you have any questions for us, please feel free to reach out. If you want specific market data, please feel free to reach out. And once again, I'm happy to deliver this message to you and this market stats. And I look forward to having conversations with you in case you do have any questions. Thank you so much.